Here is an example how to read market structure in real world. And just like I mentioned earlier in this course, the principle of reading market structure apply to all financial assets, whether it's Forex, indices, commodities, or stock. Once you know how to read the market, you can trade any assets you want. Now, let's walk through the steps. First, choose which asset you want to trade. I personally like to trade Forex, indices, and commodities, but you can choose whichever asset you feel comfortable with. So scan all the pairs you usually trade and then only trade the asset you find it clear to the eyes. Don't trade an asset if you cannot read the market structure clearly, for example, like this. You can either wait until it's become clear or find another asset that is easier to understand. For instance, let's say I want to trade the German index because the market looks clear to me. So I move on to the next step, that is selecting the time frame. Choose any time frame that suits you, but I will use daily candles to mark the significant structure as an example for swing trading. If you're a day trader, you can start from H4 or H1, and if you're a scalper, you can start from lower time frames such as 15 minutes. After selecting a time frame, the next step is identifying the structure break. Alright, before we start, let's learn how to look at the overall structure. Let's see from here. Do you see this chalk which stands for a change of character or break of structure for the reversal? The market was in a downtrend before this break to the upside, and this was our last lower low. This lower low was confirmed by the inducement to the upside because it was a downtrend. On the major structure was a downtrend, and to confirm that lower low, you need to see first pullback on the smaller time frame to be broken. And this break of structure on the minor structure, it confirms the last low become a lower low. Now, you might wonder why I didn't choose this as the inducement. It's because there was no structure break to the downside from this low in the minor structure. The last break to the downside with the candle body was this. That's what we consider this high as our inducement. If there was the break of structure to the downside with the candle body on the minor structure like this small high could have become our inducement. However, since there is no such break to the downside here with the body for the minor structure, so it remains that the last high from the minor structure become our inducement. Now, after the price breaks the inducement, the market breaks more to the upside, changing the trend and creating an inducement for an uptrend, this new inducement. Just to refresh your memory, what is an inducement? An inducement is the first break to the upside or to the downside from a minor structure that confirms a low becomes a lower low or a high becomes a higher high. Now, let's focus here. This break to the upside confirms that the last low become a higher low. Once you see the break of the major structure to the upside, you wait for another inducement. You can often notice the minor structure clearly in the same time frame as the major structure like this, but if not, you can find it on the lower time frame to find your minor structure. But to me, it looks very clear. Now, you may ask why my inducement is not this one at the top. It's simple. It's because this is the last minor structure that broke to the upside with the candle body. Let me show you. This is like one leg high, low, high, low, high. So it makes this low become an inducement. You see, because there is no more break of structure with the body to the upside. And the moment the inducement breaks, then it confirms the last high become a higher high. If you're new to trading, spotting all highs and low and break of structure and inducement may take some time. The key is to spend time studying chart and gaining experience. I suggest you rewatch this video part several times and focus on what I say. This will help you better understand the concept. Now, once you identify the inducement and it breaks, it is time to start looking for buying or selling opportunities depending on the breakout on the major structure. In this case, I'm looking for buy because the major structure broke to the upside. Where to buy? From this bearish candle. I use the order block or supply and demand for my entry strategy. Now, here is another order block for entry. Take a look. Right after it hit the inducement, hit the order block and going higher. And another one, it breaks the inducement, hit the order block and it goes higher. In the next course, I will share other entry techniques that are easy to apply, especially for beginners. Once you understand how to read the market structure, finding the right order block or supply and demand will be as easy as picking the perfect avocado in a grocery store. But that avocado thing is a whole different module. Alright guys, that's a wrap for today's course. I appreciate your interest in the topic. I hope you find it informative and beneficial.